Good morning to everyone. I have the honor to moderate this amazing panel about technological future of investments. To talk about this, I'm glad to introduce you two well-known experts on these topics. María Calderón Salcedo is the head of Latam sales for MarketAxess. In this role, Mrs. Salcedo is responsible for managing client relationships and trading distribution across the fast-growing region. Additionally, Mrs. Calderón leads hedge fund and ETF sales for MarketAxess globally. She holds a BA in economics and an MBA from the University of Texas at Austin. Thedore Diming is head of advisory and core beta solutions within JP Morgan's asset management division. He's responsible for designing and constructing investment solutions that will be offered through asset and wealth management. Prior to this role, Thedore served as a head of investments for intelligent digital solutions within JP Morgan. Thedore holds a BA in history and government from Lake University, a JD, and an MBA from New York University. Without any further comment, please, Maria and Thedore, the floor is yours. Welcome to the Amafore's annual event. Please, Maria.
Thank you, Álvaro. So yes, as Álvaro mentions, I run the global hedge fund, ETF, and Latin American sales teams here at MarketAxess. We are the global leader for fixed income electronic trading. And with that, we are uniquely positioned to experience firsthand technological industry trends. And we've seen an ever-changing market, especially in the last couple of years, where adoption of electronic trading solutions and the use of fixed income data has accelerated at a very fast pace around the world. We see the need for data and AI tools increasing, and the availability of data currently available to the markets has completely transformed, or is starting to completely transform, the fixed income market. Within the emerging markets, we've seen strong global adoption of electronic bond trading. And we categorize this as in the different regions, and the fastest growth regions are Asia and Latin America. In a way, we see this kind of getting up to speed to the trading speed of the US and Europe. And to give you an idea of the adoption globally, we've seen over 560 billion in US dollars traded electronically so far this year. So it's a large number. It's a large number comparing it to any other reference point. And within this, hard currency is fast paced, but also local markets. And within our local markets, what we're seeing is globally, what's most actively traded is Mexico and Brazil, followed by South Africa, Poland, and other emerging market, local market currencies. We currently have 28 currencies, and we just added China and other frontier markets like Serbia, Egypt, and Hong Kong. And this is due to client demand to trade electronically these markets. So it's changing rapidly. And just to take you a little bit back in history as to how it got to this place, MarketAxess had a vision of creating tools that allowed investors to obtain liquidity and reduce trading costs electronically. And the other big piece to this was to prove best execution on every trade electronically. This has expanded into forming complete connections from front end to back end on the complete trade cycle. And now it has evolved into fully no-touch automated solutions. So we're seeing the transition, right, from trading by phone and on paper, all the way to at the click of a button, everything sort of flows electronically, and it's a complete trade from where the portfolio manager decided it would be an order all the way back to execution, order management system, and back to risk. So within that, we've also seen adoption of all-to-all, of our all-to-all global network. And what this does, we call it open trading. And it's a tool that we've given to investors to be able to access liquidity, not only within their immediate liquidity providers, their banks and broker dealers, but to access liquidity from all around the world. To give you an example, if a Mexico City investor wants to buy Pemex bonds, and there's a seller out of Switzerland or out of Taiwan, this trade can be completed electronically, anonymously. They'll never know who's on either side, and they can gain that liquidity in seconds. So this adds incredible efficiency to the markets. It's a cutting edge technology that unites a network that currently it's over 1,800 fixed income investors. It's very powerful, and it was never more critical than during our most recent pandemic liquidity crisis during the pandemic. The most important source of liquidity that we saw in emerging markets was this all-to-all network. The other important development there that we observed, and again, I go back to the pandemic crisis because it's a meaningful event that brought significant market structural change to fixed income markets and to emerging markets. During that time, we saw ETFs being the most important signal of net asset valuation. As we would see ETFs trading, that would also translate into bond trading over our network and translate into liquidity via our all-to-all network. And I'm referring obviously to fixed income ETFs and the fast pace and volumes that we saw there. So many different inputs are creating a different market structure, and the need for liquidity and technology is ever changing. The other thing that I would add is, with all this trading happening electronically, there's now a substantial amount of data that people can use, that investors can use to model their portfolios and to see pre-trade transparency, and also enables more automation into this market. And with that, I'll pass it on to Ted Diming.
Hello, and thank you for having me today. My name is Ted Diming, and I am responsible for a series of portfolio managers who run a variety of investment solutions for individuals, for pension plans, and for other wealth management platforms. And one of the key reasons technology is driving the evolution of asset and wealth management is the function and the byproduct of the fact that consumer preferences are changing. Today, when an individual is thinking about their retirement, when they're thinking about their future, when they're thinking about their investment experience, they're not going to compare an asset manager to another asset manager, a wealth manager to another wealth manager. They're going to compare them more and more to other consumer goods companies. Whether that consumer goods company enables them to order a taxi on their phone or order goods and services to be delivered to their apartment, this is the reality that our clients, our pensioners, and our prospective consumers of investment products are really going to compare us to. And as a result of that, the industry has needed to change. And it's my belief that because of those consumer trends, technology is going to move faster and faster to enable end consumers to get on-demand information about what they're invested in, how they're invested, and why different portfolio managers are making the decisions that they're making. Other things that are going to drive continued innovation through the acceleration of technology are things like mass personalization and customization. Individuals who are used to just consuming their investment products through the ownership of a mutual fund or an ETF now want something that's designed just for them, designed for their long-term goals, their personal interests, the exposures that they want. And all of this takes the form of something that I generally call investing beyond just a benchmark. Yes, the underlying mix of assets will ultimately matter, but being able to take that information that drive the consumer to enable better investment decisions is going to be essential for the delivery of investment products in the future. As a result of that, the way in which asset managers think about not only the hiring of people, but also the types of skills behind those people are going to matter more and more. When I first joined JP Morgan 20 years ago, the focus was on CFAs and MBAs, and that still is essential when it comes to insights and expertise when it comes to investing. But even more so today, I'm looking for individuals that know how to code and know how to program, with the lens being that that intersection of technology and fundamental insights will lead to much more differentiated investment results. From a business investment standpoint, yes, we will continue to invest in people, but the ongoing investment of all things technology will be essential for firms to be able to grow their global presence and to scale their investment solutions. And then finally, and I'm going to finish where I started, it's going to be more and more about the end client's experience. If you have a good product or a good solution, but you're not able to communicate to your clients in a way that they understand on their terms when they need that, the probability of success goes down significantly, not only from an asset management perspective, but from the probability of enabling your investment products to better meet your end client objectives. And so if you can use technology to expand the opportunity set, to personalize the investments and go beyond the benchmark, and also enable consumers to consume it in the way that they're used to consuming other goods, you are going to have a franchise built for the long run. So Álvaro, I'll pass it back to you.
Thank you. Thank you very much, Ted and Maria, for sharing your knowledge and views about the technological future of investments. This has a great value for the conference and for all the attendees. Now, I will use the remaining minutes to ask you some questions and take advantage of your experience. Maria and Ted, please tell us, what are the main technologies used in the investment space that we must follow in the future?
Sure. And I'll take that first, Ted. So I think, as I mentioned before, we feel that open trading and all-to-all networks are starting to be such a critical injection of liquidity into the market. So that is very important. And without technology, you really just wouldn't be able to connect liquidity from all the different types of investors out there. So open trading would be a critical piece. RFQ has been here for several years. It's here to stay. It's obviously has evolved from what we used to know as RFQ into a very sophisticated RFQ these days. But it's here to stay, and it's one that it's the most normal way of trading, except now powered by technology. Along with RFQ, there's now protocols allowing for investors to request for market. There's auto execution solutions. There's auto responding solutions that allow you to tap into the all-to-all networks. There are now live executable market screens, and these have started to be out there for the most liquid part of the fixed income market, but soon there will be for emerging markets, and we think that will change also the landscape and the speed of execution for investments. API connectivity. I think, most people should be aware of their order management systems, but they should also be aware that they can connect directly to the different networks, to the different technology available out there. So I would say those are the relevance for now, and these will definitely evolve into tools.
I'll build on some of those comments, and I couldn't agree more, particularly with that last point of the importance of API connectivity. And just to illustrate what an API connection can enable a consumer to do, imagine the individual that still needed to send a letter by horseback ride. You handed it off to a postal worker, and they jumped on a horse, and imagine they had to take that to California. Conversely, think about the API as an email way of distributing data. End-to-end connectivity with a variety of sources that can lead to amazing efficiencies in execution and access to data. Other things that you've heard likely lots about, things like blockchain and the cloud, all I think are going to have an ever increasing impact on the way people invest and trade and manage their finances. But one of the things that I think is also going to be more and more important is this whole concept of what I call alternative data. So when you have APIs, when you have blockchain, when you have access to so much information, it's tougher and tougher to have a competitive edge just through fundamental research. Because everybody knows when Microsoft is going to report, and everybody knows what happens after Microsoft reports. But if you can have a different lens on things that may impact the economy, think about satellites looking at ports and volumes of imports and exports. Think about satellites looking at consumer parking lots. That available to different types of data in almost real time will be some of the things that more and more will have applications on the way people invest.
Thank you so much for both of you. Really interesting what you mentioned about APIs, blockchain, etc. It's really amazing. Maria, in your opinion, what is the future of automation of tools for trading and investment?
Thank you. And yeah, very much along the lines of what Ted mentioned, I think that the data, the access to data enables just an enormous amount of possibilities. Some things that we're doing and ongoing is putting things in the cloud for them to be readily available for anyone else connected to the cloud. So that gives you speed of analysis and access to an enormous amount of data in a very short period of time. So in the last couple of years, we've seen the evolution of electronic trading with a pretty manual input go to low touch and no touch in fixed income. It's still very early days compared to what we're seeing in FX or equity markets and other more advanced and faster markets, but it's definitely in its way, and it's rapidly approaching the fast pace. To give you an example, algorithmic pricing just in one quarter brought 4.4 billion prices in just one quarter to our network. That liquidity and that number of prices, just imagine the number of data points that were generated and captured to create something bigger. And we'll talk about data, because what we've done with those prices and with every data source currently available is we've unified them into artificial intelligence, give our investors a predictive level of where bonds will trade next. And that automates, right, everything that Ted is talking about. That enables the investor to be fully equipped to make investment decisions with a vast amount of data. I think that what will be hard is how do you consume all that data? How do you summarize it? How do you summarize it to complement your fundamental research? And I think that that's where investors should evolve to be able to consume the data and pair it with their own analysis.
Thank you so much, Maria. I agree that data change everything. We are going to talk a little bit more about data in some minutes, but now let's talk about machine learning. In your opinion, what machine learning will mean for asset managers?
When people hear terms like machine learning, they often look around to see if there's a robot coming after them. And I will say, not yet, but maybe eventually. When we think about the application of machine learning today, one of the most useful applications is when you're able to focus on tasks that are very repetitive. Think about trade reconciliation. Think about a variety of cash flow related analysis. Those types of things, you can use machine learning to do a bit more automation on a day-to-day basis, providing much greater scale to various businesses and enabling human employees to focus on higher value add, higher impact types of roles and jobs. The other thing I'll say specific to machine learning, and this was put forward by Maria as well, think of the concept of pattern recognition. Something that you see today, you might think has happened before. You may remember that this crisis was similar to another crisis, but you have to jog your memory. You have to think about what took place, and you have to think about what was the impact of the correlation to equities, to commodities, and so on and so forth. Well, by using machine learning, you can match fit today's crisis, today's environment to different patterns that took place in the past and potentially visualize those events. And that type of data visualization empowered by machine learning can enable portfolio managers to act quickly, to better jog their historical memory and potentially trade in a much more efficient way.
Thank you so much, Ted. This is amazing. We can learn from past events using machine learning, and of course, a powerful tool for the future, without a doubt. And Maria, let me change a little bit the topic, and I would like your opinion about how is implementation of new technologies in the investment industry reduce trading costs, improve liquidity, and create market turnover?
Sure. So as I mentioned quickly before, with the ability of aggregating liquidity and having pre-trade transparency, investors can now sort of see what their cost of trading will be. But with the access to liquidity, not only to their immediate liquidity providers, counter banks and broker dealers, they can also now access sort of a global network. In Q3, we saw something like 121 million in cost savings delivered to clients. And we measured this via TCA analysis, trade cost analysis, trade by trade per investor. So if we add it all up for our investors, this is what it delivered. And it goes back to just aggregating liquidity at the point of execution and delivering best execution, right? I think that also having the visibility as to what the transaction costs just gives investors just the ability to do more with it. So I think that those are the main ways that it does. I think that if you look outside of the investment and trade cycle, there's also significant efficiencies that are created for post-trade and pre-trade, more importantly to post-trade, where there's there's now best execution proof and compliance, and a compliance trail of everything that happened in the investment decision. And this is now all electronically recorded and available for more analysis and more improvement within the firms. So I think that those would be the ways.
Thank you so much, Maria. Really interesting. And let me go back to big data. Ted and Maria, I want to ask you another question related with big data. How has your technology and infrastructure evolved to keep up with big data? What is your approach to big data in emerging markets? And if you can focus in Latam, that would be great. How do portfolio managers interact with models that are analyzing data and making recommendations? Can you please talk a little bit about these topics? Thank you.
Sure, and maybe I'll defer to Ted to start with that one.
Yes,
sure.
Ted, please start with that one, and then you, Maria. Thank you so much.
Sure. So I'd say there's a lot of parts to that question, but let me just start at the firm level. Technology is moving faster and faster. And in many instances, when you look across industry today, the dollars that they're spending is just to get them caught up on where technology was years ago. So that means firms need to spend more and more. And it's not just about machine learning or AI, it's cybersecurity, it's all different things that go into it. So when you look across the asset and wealth management business and industries, more and more capital is being allocated to invest directly into all things technology. The other thing that you're seeing more and more are dedicated parts of firms who are thinking about data. So we've got dedicated data science teams in almost all of our lines of business, and technologists that are not just in an office to make sure you can connect to Zoom on time, but the ones that are sitting side by side with the investment teams. Today, as a portfolio manager and CIO, not only do I have PMs sitting on multiple chairs, but I have a dedicated technology team that's helping us bring this information to life. One of the things that I think is going to be an ever increasingly and more prominent tool is something that we refer to as natural language processing. We've talked about the importance of data. Now today, data comes in many forms. It's not just an analyst report, but it could be a local newspaper printed in China. It could be a TV show that's hosted in Sao Paulo. And all of these data points are very, very difficult to translate and ascertain the specifics of it. So more and more today, we're using natural language processing to scour the data universe to find individual things that are relevant to the investments that we are making today. And it's my firm belief that when you think about the super investment solution of the future, it's not going to be all human powered or all machine powered, but it's going to be that connection of AI, machine learning, natural language processing that's enhanced by the fundamental insights of a portfolio manager that's going to give someone the edge. And so the more that firms can equal that balance between fundamental insights and technology, the better they are going to be to deliver to their end consumers. The other thing that I'll just say quickly as it pertains to what's going on in Latin America and how this type of advancement in technology can enable people to better interact with consumers is because of the ability to personalize and understand even more so the nuances. I envision a future state where individuals are not just going to be able to buy the ETF that's on the shelf, but they may be able to go onto their phone and get access to institutional quality wealth management via what's called a robo-advisor. They may be able to have thematics or environmental or social causes that are local in nature embodied within their portfolios. And all of those types of things would not be possible without all the advancements in technology that we've seen over the last few decades.
For sure, I agree. And I think you touched on an important point. I think data is very fragmented and you can get it from so many different sources. So one of the things that we've done and we've been improving is unifying as many sources as we can. So for example, for emerging markets, we are utilizing machine learning and artificial intelligence to combine all known data sources to a particular bond. And we combine all of those sources. Let's say, in the US, there's FINRA's Trace. In Europe, there's Trax, which is a European repository where trades happen and go into. And then we look at our own data trading points, right? And we unify all of this to create one single bond price that will give the investor the predictive level. We are calling it Composite Price Plus, CP Plus, which basically just gives them that where will this bond be trading next? And that is very powerful because now it allows the investor to price an entire portfolio with predictive data as to where it will trade next. In addition to that, there's also liquidity measures that we have comprised in a similar fashion, with utilizing different factors as to what is the liquidity of a single bond, and then what is the liquidity of the entire portfolio, looking at all the different data points that we can analyze for the bond and for the portfolio. So we feel that this is giving investors a very important tool to summarize where they in making their investment decisions and in picking one region versus another, or a bond versus another bond with better liquidity or better chances of trading. We have also something called tradability, which also gives prediction of how easy will that bond trade. Will that bond trade today or at the time of the trade? So the tools continue to evolve, and the infrastructure for automation continues to evolve, giving portfolio managers different tools to analyze their data and their models. So yeah, it's changing, and I think we're definitely utilizing as much of machine learning and AI to come up with tools for our investors.
And Maria, if I could just chime in, I think that illustrates the importance of portfolio management and the importance of the end-to-end perspective on an investment idea. Because I can imagine if I just use machine learning and AI to get a quicker insight on the potential direction of something that I buy and own, and imagine I still had to pick up a phone to trade that bond, and it could take me multiple minutes or hours to figure out what's out there and what's the bid ask, so on and so forth. By not only having technology empower better and quicker insights from an alpha standpoint and pairing that on the execution side, altogether, it leads to higher potential for better outcomes for the end consumer of investment products. So I think it's super important to look at that holistically.
Absolutely.
Thank you so much for both of you. We are almost out of time, but I have a last question. We have discussed many technologies and its implications to the investments arena, but please, Ted and Maria, tell us, how could the Mexican pension funds start to incorporate these technologies and get ahead the future years?
So I'm happy to go
first.
Go
ahead, Ted.
I'm happy to go first on that one. One of the things that I would suggest is not only everything that we put forward specific to speed of execution, reduction in transaction costs, the different types of insights the asset managers that you work with can glean using AI and machine learning. But one of the things that I think over the long run, as a pensioner, making sure that the aggregate plans can take their personal journeys into account when solving for different investment options. imagine you could get to a point in time in the future where there was almost a pension of one. The Ted Diming retire at 57 with XYZ dollars in assets. Those types of insights can lead to greater personalization. And what we found time and time again is that if you personalize an investment, the possibility and the probability of the individual not only sticking with their investment, but also, where possible, adding to it or investing elsewhere goes up a lot. So using all of that stuff to make sure that the individual risks, insights, and outcomes are taken into account, as well as enhanced returns and lower costs, are all things that will benefit any pension plan.
Right. And I would say, it must be a little bit overwhelming to hear about all this new technology, the cloud, blockchain, systematic trading, algorithmic trading. It must be a little bit overwhelming if you are still to adopt certain technologies. So I would say to Mexican investors, adopting technology is not hard. It's actually easy. It does take, a few steps to evaluate, right, the efficiencies that it can bring, the reduction in costs. It might be as easy as downloading an application and seeing what prices are showing in that application, right? It takes changing behavior, because we've done things in a certain way for many, many years, but there are better ways of doing it, or there are more efficient ways of doing it. So I think it does require an analysis of, how does this benefit my business? How does this impact my investment strategy? And how can I just log into a platform, and the prices that I see are going to improve my execution, are going to deliver the alpha that you're hoping to that you were designed to achieve, right? So it's not as hard as it seems. I think it's take it step by step. Start with looking at what technologies you could immediately adopt, whether it's for pricing or for trading or for analysis, and then start one at a time, implementing them, downloading applications, and then leave the technology to the technology experts. Is what I would say.
Thank you so much. We have a couple of minutes just to final remarks. I don't know. Ted and Maria, can you please give us final remarks from your side?
Sure. And I'm going to echo Maria's comments in this perspective. Change is hard. And technological advancement, particularly when it can impact day-to-day life, may be even harder. But the world is moving fast. And the ability to use technology to enhance everyday life is evident to everyone. But those same advancements should enable better long-run investment potential, lower impact from transaction costs, and the ability to get access to investments that look and feel more like you, the consumer, wants them to feel. So don't be afraid of change. It is happening, and make sure that you partner with firms that are also embracing that type of change.
I totally agree. So thank you for having me here. Mexico is starting to be a great partner for us. We've seen Mexico and Brazil being the fastest adopters of new technologies out of the Latam region, and they are side by side with Asia. I think that it does take that change and that decision making to adopt technology, but don't hesitate to reach out to attempt the change and see what you can get from it, because the efficiencies and cost reduction is very significant, and it'll impact your investment portfolio directly. So we're here to stay, and we will see you next time.
Thank you so much, Maria and Ted, for sharing your experience and knowledge. It has been an honor to moderate this great panel with both of you. Thanks a lot and have a great day.
Thank you.
Thank you.
Great to see you, Ed and Álvaro. Bye-bye.